Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Today we're looking at a stack of sources that, honestly, they read less like financial reports and more like, well, like strategic battle plans.
Yeah, that's a good way to put it.
Our mission is pretty clear. We are tracking this sudden, really dramatic acceleration of institutional and governmental adoption of digital assets all around the world. And at the same time, these major tech moves in key global hubs.
It's a moment you really have to pay attention to. If you've been following the space, the material we have confirms a definitive shift. I mean, Bitcoin, stablecoins, all the related tech. They're not just speculative plays anymore.
Not at all.
They're being actively integrated as, serious reserve assets, operational tools, basically essential components for modernizing economies across whole continents.
Okay, let's unpack this. And a good place to start is just the global pulse right now. So we're setting the scene for November 27th, 2025. Now, the U.S. is mostly slowed down for the Thanksgiving holiday, and the UAE has a long weekend.
Right, until December 2nd.
Exactly. But despite that, the institutional momentum is, you can feel it.
We're seeing Bitcoin trading near, 89,600? And Ethereum is back over $3,000.
The price is one thing, but the real story is in the flows. For weeks, we've been tracking these disappointing institutional outflows. The big news today is the reversal. We're finally seeing net inflows come back into these digital asset products. It just signals a renewed conviction from institutions.
I noticed that turnaround immediately. I mean, after 6 straight weeks of just discouraging numbers, right? ETF data is finally flashing green. The combined net inflow across Bitcoin, Ethereum, Solana, and XRP ETFs, it's about $31 million. Now, that number, it might seem small on the surface.
It does.
But it's the trend reversal. That's what matters.
Exactly. And when you break it down, Bitcoin is Well, it's unquestionably leading that renewed buying pressure. It accounts for, I think, around 20 million of that inflow. But the fact that we're seeing measurable fives, 5 million here, 3 million there, into Ethereum, Solana.
Into Ethereum, Solana, even XRP ETFs. It tells us that these big investors are looking beyond just Bitcoin again. They're diversifying their regulated crypto exposure.
But if we zoom out, I think the most crucial nugget for you, the listener, is the one that signals sustained buying pressure, not just trading. Digital asset treasury inflows. This is money moving directly onto corporate balance sheets for long-term holds. And that has crossed the $1 billion mark after a really significant drought.
That 1.34 billion figure, that's a completely different animal. When money goes onto a corporate balance sheet, it's not short-term speculation. They're not looking for a 10% swing.
Oh.
It indicates a decision by major institutions, maybe prompted by some regulatory clarity or just the rising asset price, that Bitcoin is now a necessary strategic part of their long-term reserves. And that context really sets the stage for what we're seeing at the sovereign level.
Okay, let's pivot right there to the U.S., where we're seeing states, actual U.S. states, treat Bitcoin as a strategic reserve asset.
Right.
And the focus has to be on Texas, a major turning point.
It's a milestone move.
Texas is now officially the first U.S. state to add Bitcoin to its strategic reserve.
And they kick things off with a modest $5 million purchase. This was back on November 20th when Bitcoin was around 87,000. But the way they did it, the execution, that's what really reveals this institutional comfort level we're talking about.
Right. They opted not to immediately self-custody the physical Bitcoin.
Right.
They used BlackRock's Bitcoin ETF for that initial allocation.
Yeah.
So why is that? Why is that such a critical signal?
It speaks volumes. It's all about risk management and regulatory comfort. For a government entity like Texas, custodying physical Bitcoin introduces this massive operational headache.
Sure.
And it means accepting direct security risk. So by using a highly regulated product like BlackRock's ETF, the IBIT, they get exposure instantly through familiar investment channels. They bypass all that complex setup.
And they get the liquidity.
The plan is to use IBIT as a bridge, a placeholder, really. While they take the time and the resources to build the secure, compliant infrastructure they need to eventually hold the asset themselves, it's just a measured, responsible way for a state to enter the market.
That makes perfect sense. You minimize the friction while you secure the exposure. And Texas is just the start. We're seeing major players like Harvard and Emory University tripling their holdings in these Bitcoin ETFs.
And even sovereign wealth players like Abu Dhabi's Al Wada Investment are boosting their exposure.
And the U.S. strategic moves. It's not just about buying and holding either. New York just became the first government in the world to approve a $100 million Bitcoin-backed municipal bond.
It's huge. This is integrating Bitcoin into infrastructure financing.
It sounds incredibly complex. I mean, if Bitcoin is the collateral, what does that heavy over-collateralization requirement actually mean for you listening at home?
That's the crucial part. So muni bonds are normally very low risk. They're backed by the government's ability to tax people.
Right.
With a Bitcoin-backed bond, the volatility of the collateral is obviously the main risk. So heavy over-collateralization just means they aren't using $100 million of Bitcoin to back a $100 million bond. They might require, say, $150 or even $200 million worth of Bitcoin.
To create a buffer.
Exactly, a deep buffer against any potential price drop. It's a mechanism to keep investors safe while they pioneer this whole new class of financing for their economic development fund.
So on one hand, we have developed nations finding these sophisticated low-risk ways to integrate Bitcoin.
Yeah.
Now let's shift gears drastically. Let's look at the macro shift in South America, where adoption is driven not by strategy, but by outright financial necessity. Let's talk about Bolivia.
Bolivia is facing an acute crisis. We're talking crippling high inflation and a severe shortage of U.S. dollars, which, they rely on for almost all of their trade.
And that crisis forced their hand.
It did. Bolivia is now officially integrating cryptocurrencies and stablecoins, specifically USDT, right into its core financial system.
The government just decided fighting it was too costly.
Yeah.
What are these new rules that are allowing for this financial system overhaul?
The rules are dramatic. I mean, they now allow Bolivian banks to custody digital assets and to offer a full suite of crypto-based products. This means ordinary citizens, businesses, they can get crypto savings accounts, access credit, secure loans, all through their local banks.
Wow.
This wasn't a slow transition. It was a sudden realization that, recognizing crypto is it's smarter than trying to control it, especially when your foreign trade is on the line.
And the source material shows local commerce is already moving. Major companies, Toyota, Yamaha, BYD, are accepting USDT. And crucially, the state energy firm, YPFB, is looking at using crypto for imports. I mean, that's state-level infrastructure now, depending on a stablecoin.
What's so fascinating about the adoption of USDT specifically is that it serves as a critical proxy for the US dollar that they're acutely short of. It gives them dollar stability, a way to transact internationally without relying only on traditional banking, which is clearly strained. And this move is partly driven by regional competition, countries with similar problems.
Like Argentina.
Like Argentina, they're watching Bolivia very, very closely. The fear of missing out on economic stabilization, that global FOMO effect, it's pushing these nations toward digital assets just to stay competitive.
Okay, so from distressed necessity in South America, let's jump over to Asia, specifically South Korea, a market that's historically been an OG in the crypto space. And they are making massive strategic moves that blend tech and finance in a way we really haven't seen before.
The headline story here is a landmark merger. It signals the future of centralized digital finance in Asia. South Korea's biggest crypto exchange, Upbit,
Which is owned by Dynamo.
owned by Dynamo, is set to merge with the tech giant Naver Financial. This is an enormous all-stock deal, $10.3 billion, pending regulatory approval.
A $10 billion deal suggests the goals here are tectonic. What does this convergence of a tech giant and the leading crypto exchange actually mean for South Korean finance?
It means they are building a national-scale digital payment architecture. The goal is really twofold. First, to aggressively accelerate stablecoin adoption, including pushing forward Dynamo's own plan for a one-backed stablecoin.
Okay.
And second, they plan to use this new combined entity to establish a powerful Layer 2 Ethereum network, specifically for payments and settlement across their massive combined user bases. They're basically cementing the future payment rails, making sure they're institutionally controlled and compliant.
So this is about ensuring the digital future of the one is managed by these two corporate giants. And that centralization push is also being echoed by the traditional banking sector, isn't it?
Absolutely. South Korea's leading bank, Kakao Bank, which is part of the enormous Kakao Group, is developing its own one-backed stablecoin. They're calling it Kakao Coin.
Are they still just in the idea phase, or is this a serious funded development?
Oh, this is well past planning. It's moving to full-scale system development. And they're leveraging the entire resources of the Kakao Group to do it. Their objective is to power next-gen payments, settlements, and the broad tokenization of financial services across the whole nation. And critically, they are preparing their systems for tokenized security offerings, or TSOs.
TSOs, tokenized security offerings. For you listening, why is that distinction so important? What does that mean in practice?
It's the difference between crypto as a currency and crypto as infrastructure for capital markets.
Yeah.
A TSO is basically a traditional asset, like a piece of real estate or a stock or a bond, that is digitally represented on a blockchain.
Okay.
So by preparing for TSOs, Kakao is signaling they plan to tokenize high-value regulated assets. This move opens up whole new avenues for things like fractional ownership, much greater liquidity, and 247 trading for traditional financial products. It's integrating traditional finance onto a digital ledger.
South Korea is clearly in a race to define its digital future. Now let's pivot one final time and look at a key regional technology focus. This is coming out of the Middle East, specifically Dubai, and it's all about AI and data security.
Yeah, this takes us into the necessary technological scaffolding you need for a fully digitized economy. The global data security leader ForcePoint is expanding its Middle East presence in Dubai Internet City, or DIC. And they're doing it specifically to advance AI-native data security solutions.
DIC has this iconic reputation hosting all the big tech players.
Yeah.
Why is ForcePoint focusing on AI-native data security in the UAE right now?
Well, DIC hosts over 150 global cybersecurity and AI companies. We're talking Oracle, PayPal, NVIDIA, Google, all of them. And ForcePoint's focus on AI-native solutions is critical because as the UAE accelerates its digitization goals, data protection can't just be about building a wall anymore. It has to be dynamically managed by an AI that understands and anticipates threats. This move is about enhancing the foundational security you need for a knowledge-based economy where trust is everything.
And we also saw AI integration moving beyond just data security and into well, into civic life with the Dubai municipality.
That's a great example of practical, tangible AI adoption. Dubai municipality signed an MOU with the German tech giant Siemens, and the goal is to integrate smart technologies into public spaces, parks, beaches, public facilities to make Dubai more sustainable.
So Siemens is providing the brainpower for public facilities. What kind of real-world changes will the average person actually see from this?
Primarily, improved efficiency. Siemens tech will be used for things like predictive maintenance, so anticipating when a system will fail before it happens, and significantly improving energy management. They're using smart analytics to monitor real-time operations, making sure resources are used efficiently. It's just a very practical city-scale application of AI to improve quality of life.
Okay, so before we wrap up this global tour, we have to address a topic that's generating a disproportionate amount of noise in the crypto sector. Quantum resistance. Privacy coins like Zcash are seeing a lot of chatter around this. Zcash is currently leading the quantum-resistant market cap at, what, $8.5 billion?
Yeah, we really need to inject a strong note of critical context here. While focusing on securing assets against future threats is, it's commendable. The level of panic or immediate concern around quantum resistance is genuinely misplaced.
It's overblown.
It is. We are conservatively at least a decade away, maybe even longer, from quantum computing being mature enough to pose a true threat to the cryptography securing Bitcoin.
So the idea that a quantum computer will just suddenly break Bitcoin's encryption next year, that's just hype.
That's entirely hype. And furthermore, if that quantum leap does happen, the immediate and an arguably larger systemic risk isn't just for decentralized assets, it's for the entire infrastructure of legacy Web 2 platforms.
Like what?
Banking passwords, ATM networks, email encryption, all of it. Those systems are far less agile than the crypto ecosystem. But the good news is the crypto industry is already pouring massive resources into developing quantum-resistant algorithms. We will have solutions ready long before the threat becomes real.
That's excellent perspective. It reminds us that threats to legacy systems often come before threats to decentralized ones. Okay, let's zoom out and just recap the sheer breadth of global action we've covered.
I mean, we've seen wealthy, established regions finding compliant ways to adopt assets, from a U.S. state using a BlackRock ETF as a bridge,
Right.
to New York pioneering Bitcoin-backed bonds with heavy over-collateralization to manage the risk.
And at the same time, we saw distressed economies in South America, like Bolivia, just ditching currency controls and fully integrating stablecoins into their banking system to fight inflation. And then you have these massive centralized strategic plays in Asia, a $10 billion tech merger building national payment rails.
And preparing for the tokenization of all financial securities. The central signal is unmistakable. Digital assets are moving from the periphery of finance to the very core of national economic planning.
Right.
And if we go back to the Bolivia case study one last time, this leads to the most important dynamic you should be tracking.
Which is?
Bolivia's move to officially embrace stablecoins. It puts significant, measurable pressure on its neighbors, particularly those facing similar economic problems, like Argentina and Venezuela. If Bolivia successfully uses these tools to stabilize its economy, to modernize its banking, to improve trade, will regional pressure and, citizen demands force other countries to rush similar laws?
Just to avoid being left behind.
Exactly. This regional rush to regulate, driven by the fear of being left behind on stabilization and modernization, that's the key geopolitical dynamic to watch unfold.
The global digital finance race is truly underway, and it seems no country wants to be the one stuck in the starting block. Thank you for joining us on this deep dive, and keep considering which countries will be the next to feel the pressure of this accelerating digital shift.